On today's episode, we are going to talk about AMD. They just reported earnings and they're down about 4%. It's now a great time to buy them. Today's episode is going to be broken down to the following. First, we're going to take a look at the recent earnings. Then we're going to take a look at some of their financial numbers. Like always, if you're new to the channel, make sure to subscribe and don't forget to hit the thumbs up. It helps the channel out so much. Remember, none of this should be taken as advice as I am not a professional. And let me know in the comments below, what are you doing with AMD right now? Are you buying? Are you selling? Are you holding right now? And while you're down there, don't forget to join the Discord channel. It's free to anybody that wants to join. And there should also be a Webull link down there. If you sign up and follow the rules, we both could get a free stock. So AMD right now is sitting at $78.88 after closing. Market cap for the company right now is $92.6 billion. Year-to-date return is sitting at 134%. So congratulations to all the longs. Right now, it is down about 14% from its all-time high of the year. We did see a small pullback in September. So let's take a look at these earnings. So this was for Q3 of 2020. Non-GAAP earnings per share were 41 cents, which beat expectations by 6 cents. GAAP earnings per share were 32 cents, and it beat expectations by about 2 cents. So we can see this company, AMD, is profitable in non-GAAP earnings and in GAAP earnings. Revenue was $2.8 billion, and that's up 56% compared to the same time last year, and it beat expectations by about 240 million. That's almost a 10% beat. Very impressive. Q3 gross margins were 44%, and that's what the overall consensus was, 44%. And we're going to see AMD is now kind of reaching its prime gross margins. Normally when a company starts to grow, gross margins are improving over time. And then there comes a state when the gross margins start to become flatline, and 44% is very high, if I may say so, especially for a semiconductor company. That's the value that we're going to start seeing in the upcoming years to be around that level. We were not going to see much of an increase there. So AMD also gave us guidance for Q4 and for the full year. So for Q4, AMD sees revenue around about $3 billion. And this is, again, way better than the overall consensus, which was $2.6 billion. That's a huge range for outlook. For the full year, AMD expects 2020 revenue to grow about 41% compared to 2019. Very strong growth, and this is up from their prior guidance. Their prior guidance mentioned that it was expecting a 32% growth. Now they're saying they're expected a 41% growth. And like I was mentioning, right, the gross margins are kind of getting into that mid levels. For the full year of 2020, they expect their gross margins to be about 45%. Another news that happened with AMD is they are going to acquire Xilinx, which is a heavy creator of FPGAs. So right now, the deal is going to be an all-stock transaction deal worth at $35 billion. I do think that's actually a pretty smart thing right now. A lot of these companies right now are using all-stock deals to make these acquisitions. And why not? Some of these valuations have increased dramatically that it makes sense for them to do all-stock deals. Unfortunately, sometimes investors are not fond of it because it does mean a bit of dilution there. This deal will expand AMD's rapid growing data center business, and it would increase the overall market that AMD hits to about $110 billion. The deal is expected to close at the end of 2021, so about a year from now. And throughout that time, it still has to go through some regulations. But right now, all Xilinx holders will receive about 1.7 shares of AMD's common stock for each share of Xilinx that they hold. So right now, if anybody wants to join AMD in the long term of things and pay a cheaper price, within this acquisitions and within these shares transformation, there's always the risk that deal might not go through. So right now, Xilinx is not actually worth 1.7 times AMD's price. So if one wants to enter AMD and accept those risks, it might be better to buy Xilinx. And if the deal goes in, you're obviously buying AMD at a cheaper price. All right, so next let's take a look at their revenue breakdown. So they collect revenue from two segments. The first segment we're going to take a look at is their computing and graphics segment. And this collected revenue of $1.67 billion, and this beat the overall consensus, which was about $1.49 billion. This is up 31% compared to same time last year. And for those that don't know, the revenue and graphics segment includes desktop and notebook processors for the Ryzen that goes in your home computer or the one that goes on the laptops. It also includes your discrete and integrated GPUs. So if you have the AMD Vegas in your laptops, or older Vegas and Radeon RX GPUs for normal consumer use are also there. They also have the data center and enterprise GPUs in this market. So all the graphics that go into the data centers are also included here. One thing they do mention is that this huge growth came from the Ryzen processor sales. So they're seeing a huge increase in CPU sales, and they're still seeing strength with their Ryzen. But they're seeing a bit of decrease. Sales were down compared to the same time last year in their graphics sales. And so this kind of tells me one thing. It seems like they're definitely taking lunch, some form of lunch. We don't know how much, but they're definitely taking a bit of lunch from Intel in their CPU realm. But in the graphics realm, it doesn't seem like they're doing as great. So I do believe this kind of gives a little bit of bullish scenario on Nvidia, and this is exactly what we saw last quarter as well. They're not pulling as much in that GPU realm, but that may change because this upcoming quarter, I do believe it might be tomorrow or sometime at the end of this month, they are releasing their new Radeon RX 6000 series, which will be for the high-end graphics market. So if those turn out good, it could be a turnaround story here in the graphics department as well. The second market is the enterprise, embedded, and semi-custom segment. Here we have for example, the processors that go into the data centers and the enterprise. This is your Million and your EPYC processors grow here. They also have the semi-custom segment, and these are chips that are made on a custom basis, and these are the chips that go onto your PlayStation 5 and your Xbox S series. I forget what's the new series called, Xbox X series. So this came in at $1.13 billion versus the overall $1.06 billion consensus. So it was up about 116% compared to the same time last year. The two major reasons is, one, they are seeing a huge increase in the EPYC processor sales, but they're also seeing the huge demand growth from the new game systems that are coming out this quarter. They are, on their strategic news and highlights, they did mention, and we can see here, they mentioned that they are on track. Let's see, laser point, on track to begin shipment for the next generation Milan server. So this is expected to go to selected customers in the Q4 of 2020 and will go full OEM availability by Q1 of 2021. They do expect very strong semi-custom shipments on the Q4 of 2020, and that's to be expected, right? A lot of demand is coming for these new consoles, so it's definitely going to help AMD in the long term of things. But remember, this is kind of, this market right here, especially in the semi-custom, is more of a cyclical market because there's a huge demand for the systems, but eventually it starts to die down until a new system is released. All right, so now let's take a quick look at their balance sheet. They have a very great balance sheet compared to when I first started looking at AMD. I started looking at AMD when they were negative, when they were leveraged in cash and they had a lot more debt. Now it's a different story. If we take a look at quick cash, they have about 1.3 billion in cash and about 500 million in short-term investments, so about 1.8 billion dollars in quick cash, and they only have about 400 million dollars in long-term debt. That long-term debt is actually broken down in senior notes. They have 300 million due in 2022, so 2 years from now. That is insane. And about 100 million due in 2026. So they don't have, their debt is pretty spread out in the future, and they have plenty of cash to cover it. So it's definitely a very, very strong balance sheet. Their total assets actually increased by about $1 billion compared to the beginning of this year, and their total liabilities have actually not changed by much. Now I want to take a look at future growth for AMD. AMD is still a crazy growth company. On average, is expected to grow 18.8% average annual growth for the next 3 to 5 years, and it's expected to continue to grow its earnings. It is profitable already, and the earnings are just expected to grow even further. Let's also take a look at past growth. They've had decent past growth. 2019 was pretty slow, but with the China trade wars and a huge delay in everything, it kind of made them only grow about 3%. But the 2 years before that, they saw 23%, and in 2017, they saw over 20% growth as well. So this is definitely it's not a super high growth company, but it is definitely one I still would consider a growth company, to say the least. Here we can see gross margins and profit margins. Gross margins are increasing when we take a look at trailing 12 months. they are kind of hitting their peak. Like I mentioned, I do believe that gross margins will stop around the mid 40 levels, and that's what we're seeing for this year and maybe for the upcoming years. But look, these profit margins are also increasing. It's so funny. I remember being in the AMD when it was still not profitable. This is probably one of my favorite companies. And I want to say it's probably the first company that got me into growth investing. I learned so much from AMD that I have done into different companies and different investment styles. AMD originally was a company with a very, very weak margins. It was not profitable. Gross margins were improving. It was seeing huge revenue growth, but it was still one that many people considered a bad investment when looking at valuation terms. Quick look at their cash flow statement. I just want to take a look at operating cash flow margins. They are improving when we take a look at trailing 12 months as the years progress. Same with free cash flow margins. Operating cash flow margins is sitting at about 10% right now, and free cash flow margins is sitting at about 8%. So we're seeing a nice growth in there. The final thing I want to take a look at is just a quick look at valuation for AMD. So AMD's forward PE ratio is sitting at about 47.45. I wanted to see another semiconductor that was kind of growing in similar levels, and the second one was NVIDIA. So here down we have NVIDIA, and that one's forward PE ratio is 48.54. So this tells me one thing: AMD and NVIDIA are priced very similar. They have very similar forward PE ratios. I do think both of these are great investments for the long-term run. I'm talking about 5 to 10 years. Both AMD and NVIDIA are great in my opinion. Personally, I'm a shareholder in both AMD and NVIDIA, and I've been a long bull on AMD way before NVIDIA. But I do believe NVIDIA, with the artificial intelligence and the machine learning, it has a bit more going on. But to me, I'm gladly would enter both positions at this time. Based on current valuations, I am not going to enter with the big position or increase my overall position with the big position. But I do dollar cost average, and both AMD and NVIDIA still seem like great to me to just increase overall position or enter in a small position just to have some skin in the game. Just to put in perspective, NVIDIA is a tier 1 stock for me. AMD is a tier 2 stock. So I hope you guys enjoyed today's episode. Let me know, what are your thoughts? What are you doing with AMD? Do you think it's way overvalued? And even though you think it's way overvalued, are you waiting off for a sell-off? What kind of sell-off are you waiting for? And what if that sell-off never happens? So I hope you guys enjoyed today's episode. Like always, take care, have a good night, and see you next time.